Okay, I think we are ready to go. Hello, everyone, and welcome to our investor event, which is brought to you by the Bioeconomy Cluster Builder. BCB is a joint undertaking between IBIC, KTN, and Scottish Enterprise, and we are funded by the European Regional Development Fund. My name is Dana, I'm from KTN, and a quick overview of today's agenda. In a moment, I'm going to talk through the housekeeping rules for today's event, and then I'm going to pass over to my colleague Kim from IBIC to give a short introduction around the Bioeconomy Cluster Builder. And then we are heading right into our investor presentations, and we have a really great lineup for you, really exciting speakers. So we are starting with Michelle from Scottish Enterprise, then we have Marta from BP, and Kem from Green Angel Syndicate, and we are finishing with Mark from BSF and Sarah from Archangel Investors. And then around 11:15 or so, we are going to have a panel discussion and a Q&A session. You're going to see we are expecting about 100 people to join today's event, so it's really busy. So if we could politely ask you to keep yourself on mute throughout the presentation. During the Q&A session, we really would like to make it interactive, and you have the option to speak directly to our investors. If you want to do this, please use the raise hand options, and then we ask you to unmute yourself and you can speak directly to the investors and ask your questions. If you feel a bit shy and you don't want to talk, it's not a problem at all. You can put your question in the chat box, and then we are going to read them out for you and ask our speakers. Also, if you have any problems with technical issues around sound and visual, let us know in the chat box, and we are trying to address them. To let you know, the webinar is being recorded, and you will be sent a link to the recording afterwards. We are also trying to share the presentations with you if we can. And last but not least, if after the event, it would be really good if you could fill out our EDI survey, and the link is on the screen, and we are going to send the link to you afterwards. And with this, I'm going to stop sharing my screen, and I'm going to hand over to my colleague Kim to give us an introduction around BCB. Kim, over to you.
Thanks, Dana. Just share my screen here. Can everyone see that okay?
Yeah, that's fine.
Yeah, good. Okay. So good morning, everyone. Warm welcome to this BCB event webinar, considering the bioeconomy from an investor's perspective. My name is Kim Cameron, as Dana said, and along with Lindsay Dunbar at IBIC and Dana and our colleague Catherine at KTN, I'm responsible for the delivery of the Bioeconomy Cluster Builder project. Special mention here also to my colleague at IBIC, Russell Clark, who's done a tremendous amount of work in securing our fantastic lineup of speakers today. So thanks very much, Russell. Before we move to the main part of today's event, I'd like to give you a bit of background to the BCB project. So the Bioeconomy Cluster Builder is a 3-year ERDF funded project. It's a collaboration, as Dana said, between the Industrial Biotechnology Innovation Centre, KTN and Scottish Enterprise, and it exists really to support the delivery of the National Plan for Industrial Biotechnology of a £900 million turnover in the sector by 2025, with 200 companies active at that time. And so this is really the sort of main aims of the project on this slide here. We exist to raise awareness of the benefits and applications of industrial biotechnology, particularly in those sectors that are less familiar with the technology. And we realise that innovation is all about connections, so we're connecting people and resources to develop new and existing value chains. And finally, we're here also to encourage the utilisation of Scotland's bioresources. Scotland has several key feedstocks which have been identified, and we work to encourage their utilisation. So how do we go about this? We run targeted workshops, awareness raising sessions and webinars like today's events. We provide innovation support through tools like the KTN Innovation Canvas. And we also signpost to funding opportunities, which brings me neatly on to talk about today's event. So we devised this event really in response to frequent requests we get from early stage businesses and SMEs. They often ask us what investors look for and how best to approach them, how their selection processes operate, and so on. And so we thought, what better way to answer these questions than to hear directly from the people who know best. Which today's webinar brings together a range of voices and perspectives spanning the venture capital, angel investor, and the public sector communities. And our speakers bring a wealth of experience and insight, which I'm sure will prove invaluable for the audience today. So, we'll move on now to today's presentations. I'm delighted to introduce the first of our speakers, Michelle Kinnaird, who's Head of Investment Management in the team responsible for growth investments at Scottish Enterprise. Michelle joined SE from Ernst & Young in 2007 and is a member of the Institute of Chartered Accountants in Scotland. So Michelle, I'll just stop sharing now and hand over to you.
Yeah, that's perfect.
Great.
Okay, so thank you very much. Apologies, I did actually try this yesterday and did it a bit better. So I'm going to kick off today and probably going to give a bit more of a kind of general overview. A lot of the investors that you'll hear post my kind of introduction, Scottish Enterprise works alongside and looks to invest alongside them. So my understanding is there's quite a lot of you in different parts of your journey. So I'm going to hopefully do a bit of scene setting and move forward from there. So today I'm going to just take you through how the strategic context fits in with what we do at SE, what we can do in the investment team to support and to guide, but also some of the other teams. And then I'll finish off with some examples, and I've tried to choose a few different examples just so that you can see the different stages in which we can help the different businesses. Okay, so I'd just like to kind of start off with what Scottish Enterprise is here to do. Hopefully you're all aware that we're the main enterprise agency within Scotland, and the investment team works across Highlands and Islands and south of Scotland. As you'll see, jobs, net zero in place are absolutely key. So net zero is at the heart of everything we do, and therefore moving forward, the bioeconomy is very integral to that. And we're going to touch on a few things today that we've got here on the slide, so about early stage investment, inward investments, and also how we help businesses make that transition to net zero by both investing in the businesses, but also encouraging others to use the technology. But overall, the message is it's about growing the economy, and the bioeconomy, in our opinion, has a real role to play in that. As has been mentioned, so why am I here talking about the bioeconomy investment? It's net zero is the way forward, and we see that enabling technology is a door to opening that. We are part of the overall plan for the industrial biotechnology vision, and I suppose where we've got, we work with, we obviously sit within government, we have got investment to make, but we work very much with industry and academia, and quite often in our deals, all of these three are coming together. So from an investment point of view, we're wanting to work with universities and research institutes. What are we looking for? We're looking for quite often platform technologies that will make that very much step change in how we do things and the way we do things. And it's all the way through from really early stage, but also supporting that to make it go all the way through to scaling. And so it's from talking all the way through to delivering, and also a wee bit of kind of myth busting along the way, because I think too often it's just like, oh no, that's just chemicals. So I think we've moved beyond that, and hopefully that helps. So how does Scottish Enterprise do that? Awareness raising, things like this. We do invest and we give advice along the way. So we'll touch on those, but I will be focusing on our investment side of things. So what do we do in the investment team within Scottish Enterprise? If we go from left to right, yes, it is about guidance. You know, if we don't need to invest, then we won't. We will not displace others. We do invest, funnily enough, so we do put funding into individual businesses, and with that comes, you know, the need to then portfolio manage that on an ongoing basis. But really, what we're all about and why we do all of that is about stimulating the market. So it's about making the market work a wee bit better, putting the right people in the right in contact with each other. And we've got some of the institutions, some of many. So what sort of scale? So since 2003, 624 million. Our companies at March, which was our year end, was 340, and it was valued about 420 million. Income, we've had a really good year actually, income wise. We've got a few large exits going through at the moment, but the income kind of up to then was about 240 million. So we are there to build the economy of Scotland, but I'll take you through how we do that. So we do that as commercial investors alongside some of the people that you'll hear from today. But the key thing for us is that bit right at the bottom is about leveraging that private sector money. That's what we're there to do. If you can put a small amount of money in that makes a difference or gets a deal across the line, then that's where we really kind of come into ourselves. So I wanted to just talk a wee bit about the guidance. These slides will be sent out. So two kind of key things there. You know, SE website, you know, please go in, have a look around that. It's got, you know, some funding advice in there. It's got grants. It's got how to access to finance. So a lot of nice pointers, good reference points in there. And also finding business support is across Scotland and beyond. So it's about how we help you access finance. So that will also take into account things like Innovate UK, some of the European programmes, obviously we're still able to get, and also we keep that up to date with whatever the British Business Bank are doing. So I think it's about finding the right investment at the right time for your business as you go along the journey. Okay. So again, also, you know, really good get references and some wee videos and things like that from our financial readiness team. This is our team leader here. He'll not thank me for that. But, you know, whether it's, well, what type of funding do I need? What does a business plan need to look like? So please, you know, use those guides and shout if there's anything else that is needed, and we keep it up to date. What I would say is, even if you don't look at it, what am I looking for? What are we looking for in the investment team? We need some businesses that are able to effectively, you know, give us a teaser that can whet the appetite, give us a really, really good feel for exactly what difference your product or your process is going to make. What is unique to the competition effectively that's out there. So yeah, we've put elevator pitch. We promise not to kind of strangle you like in there, but elevator pitches in a very short period of time to be able to absolutely hit home what you've got that's unique. And then at the bottom, all the boring things, that there's plenty of people, financial-based people that can help. So please don't be terrified about getting your pitch deck ready, you know, your business plans and your financials. The difficult stuff is doing the science, doing the financials and everything. You know, we'll find people to help you with that. Okay, so I've put up a couple of different kind of company examples there. You can have a wee look through these. They're all at different stages, and what I would say is in the investment team, we are very much a generalist. So I am not a bioeconomy expert. We invest alongside lots of different businesses across lots of different sectors, but the key things are around it being growth and innovative to make really quite a difference. Okay, so how do we do this? So it's primarily small and medium enterprises with that growth and also export potential. How do we do it? We co-invest, so angels, corporates, banks, VCs, a lot of them represented here in the panel today. We make sure the public sector is not above 50% and very much for a gap investor. So we're balancing that commercial and also economic returns. However, we will invest, so you'll hear from Sarah from Archangel earlier. We have quite a lot that we've co-invested with them. We go in exactly the same terms and conditions as Archangel and take all the same rights. However, why are we doing it? It's to benefit the economy of Scotland, and you need to have a significant operational presence in Scotland. We're very patient, like, you know, the majority of the stuff we do is equity, so it's very patient capital if need be, and sometimes, you know, there's different value inflections when we're able to get out, and it's all around values. So it's about how we invest, and we are looking at businesses that are looking at fair work first, that are looking at, even if they are in the bioeconomy, are they doing that the most green and most carbon efficient way? So I'm not going to go into each. So each of these are on our website. So what I would say is on the left-hand side, the co-investment fund, the venture fund, and our energy investment fund. These are all managed internally. So we invest directly into them. They are all equity, and the energy investment fund is a combination of kind of equity and loans. We have the Scottish Loan Scheme, which again, we invest directly. We've got 30 companies that have debt in them, and that's quite often when they're coming out of that innovation phase and they're starting to have to make sales and really kind of invest in their sales force. We also have some funds that we're invested in, so management buyouts at the other end, and also some programs that are still running from Europe alongside the European Investment Fund. I've put the Early Stage Growth Challenge Fund, so that was a COVID specific. So that's what we're about. We're looking at the gaps in the market. And we looked last year, and early stage was really, really suffering within Scotland. And a lot of the startups, the spin outs were not happening. So the Early Stage Growth Fund, as well as some of the other stuff we do with our high growth startup, we put extra money, which was part grant and part convertible loan note in. So for us, it's about listening to the market and seeing how we can help as we go through the different seasons. So who do we invest in? A very busy slide, but I think, you know, take from that, if you're starting out in your journey, you need to find smart money, money that will help you, whether it's open the doors into particular sectors or different geographical markets. And I think what you need to do is to make sure that your investor base is evolving as you grow as a company. Okay, the next step, so this is a bumpy road, hence why we've got it like this. There's no typical way to grow a business, and in the bioeconomy, what we find is sometimes the initial application, especially if it's a platform application, you think, right, okay, I'm going to go into the chemical side, that'll help, and paint, this, that, and the other. And then you actually think, well, do you know what? We have got more like-minded people in the food sector, therefore, you know, let's pursue that in order to get a proof of concept, and then we'll widen out. So what we do find is some of the bioeconomy companies take a while to find their feet and find the like-minded individuals, because very often you'll be working alongside you know, some of the investors out there that are really, you know, they're really leading the way in that new way ahead, and they're looking at very disruptive technology. The other thing I was just wanting to say is, and you know, have a wee look at these slides, we'll send them round, is you know, all the things in red, there's a lot of fundraising in there, and you will, as an early stage bioeconomy company, feel as if you spend more time actually speaking to investors and fundraising than you do getting on with moving on the technology. So I think it's getting that balance there and making sure that by the time you're coming through to the other side of this screen, that you have developed your team around you and your leadership, and your board has also developed as you go. The next thing I was want to just finish on, excuse me just a moment. Apologies, I'm kind of fighting off a cough. So on here, I've got just a couple of examples from our portfolio. I'm not going to go through any of them in a lot of detail, but what I'd like you to take away from here is that we have quite a wide range of different businesses at different stages. Celtic Renewables, a kind of very well-known bioeconomy leader. You know, we've been invested for a long time, way back with Zero Waste Scotland, but we also invested through a special purpose vehicle into their first plant as well. So we're invested in the company and also their very first plant. Then we've got the next example, Horizon Protein. So that's came through our high growth startup. they've had some grants and some convertible loan notes, and now they're coming through and into the investment team. Excuse me. Cellucomp is the next one. So we've been in there since 2005, around Sophie Nova and some other Cap Agro and very specialist investors, and they've continued to invest their money through round after round. The next one is a relatively new investment, so 2017, but is growing absolutely rapidly. We put some money in as recently as June this year, get a second tranche going through. This was 3F, so food, fuel and feed. And I think, that's a good example of, enough food is where they have kind of rebranded to. They have quite a wide range of different international investors that are all bringing that wee bit of extra insight and obviously deeper pockets. So for us, it's about allowing our portfolio to graduate through getting the right investors sitting alongside them and get that advice. The last one I put on here is Helix Power. I just thought this was quite a different one from some of the rest. So this recovers energy from steam and uses that to generate electricity and also thermal energy. So we invested for a while in there. BP Ventures, a utility company, and Angel. So really quite a mixture in there. But that's an example of an investment that we've made that we can see that across many of the businesses that we work with Scottish Enterprise, that could really help them with their transition to net zero, because any large industrial would be needing to do that. So that's all I was going to cover off today. Thank you very much, and I look forward to the questions later on. And apologies for the coughing in between.
Thanks very much, Michelle. I'm glad it's not just me that's struggling with a cough at the moment. So you did brilliantly there. Thanks very much. And that was a really helpful overview of Scottish Enterprise's growth strategy, and also your kind of open approach to working with businesses in the bioeconomy. So we're going to move now to our next speaker, Marta Schursch, Business Development and Regulatory Manager in Bioenergy Businesses at BP. Marta has over 14 years of experience in biofuels with BP. Prior to BP, she worked with a number of universities, angel and early stage investors, evaluating technologies, working on spin-offs and raising early stage funding. So I'll hand over now to you, Marta.
Hi, good morning. Good morning to everyone. Very happy to be here. Just want to check whether everybody can see my screen.
Yes, all good, Marta.
Perfect. Right. So I work in, as Kim said, I work in the bioenergy new businesses, and bioenergy new businesses is a commercial arm of gas and low carbon energy, and we work very closely with BP Ventures. So effectively, I represent here BP Ventures and also bioenergy new businesses here. So just to give you a little bit an overview of BP and basically what BP means. So we a company which has presence in 70 countries. So we look for scalable solutions, not just in one country, but something that we could roll out potentially in many countries. We have a very large and diverse workforce across the globe. So which means we have people with very different ideas, with new ideas, with different expertise, which of course helps to bring those ideas into the company, but also helps to implement the new ideas across the company. We have a significant operating cash flow, which we distribute to our shareholders, and many of our employees are shareholders. So there is a direct link between what we do and between the success of our employees. We are a significant oil company, so we have a huge upstream production, which would still remain there. But what is less known that we are also a huge renewable company. So right now we have around 14 gigawatts of developed renewables, and this is the part that we are growing. So as you might have noticed in the press, last year BP announced its new ambition to be a net zero company, but by 2050 or sooner. and also help the world to get to net zero. This would mean basically that we'd need to tackle around 415 million tons of emissions, basically 55 million from our operations and around 360 million from our upstream oil and gas production. Most important, these are all absolute reductions, so basically would have a direct impact on the world. And we also aim to cut the carbon intensity of the products that we sell by 50% by 2050 or sooner. So which is a huge task and very challenging task, because it's basically cutting everything that we sell by 50% and increasing the renewable content in the energy product. To achieve that, basically our strategy is built around 3 focus areas of activity and 3 distinct sources of differentiation. So BB's strategy will help to reshape the business from international oil companies and basically get it more focused on producing integrated energy solutions and become an integrated energy company. So this would mean that we would significantly need to scale up low carbon energy business and transform the mobility and convenience offers in the years ahead. So our main focus areas are low carbon electricity and energy. So building a scale in renewables and bioenergy, and looking into early position in hydrogen and carbon capture and storage. A big focus is on convenience and mobility, finding solutions for customers and putting the customers at the heart of what BB does, and then resilient and focused hydrocarbons. So we still would maintain some of the hydrocarbons portfolio, but we would focus on the best hydrocarbons and which drive capital and cost productivity. The main sources of differentiation that we see basically to achieve this strategy would be the integrating different energy systems, finding the best digital solutions for that, also partnering with countries, cities and industries to find the best solution in each of the locations and to find the best energy mix and energy portfolio. And of course, this would be all underpinned by digital and innovation, because all those things cannot be done without the digital and innovation. So what are our aims? So 2050 is, of course, very far away. So we need to have a bit more of an interim target and very focused targets. And just to show you some of our aims, in particular the aims in renewable energy. So our 2030 aims that you could see are basically going from 14 gigawatt to 50 gigawatt of developed renewables, significantly increasing our trading position in renewables, increasing the gas portfolio, and basically getting a significant share of the hydrogen market, both the blue hydrogen, the green hydrogen, but let's call it low carbon hydrogen, because the main focus is really on providing low carbon energy. In the bioenergy, we are also significantly increasing our production from the current production, and it's not just in the road fuels market, but also in the biojet market. So particularly in bioenergy, there are 4 businesses which drive growth right now. So we have significant biofuels and biopower production, in particular through our assets in Brazil, which produce both ethanol and produce biopower. We are one of the largest biogas supplier in the US. We supply biojet in 11 airports in 4 countries. And we have a partnership with Fulcrum, the startup company, which is commissioning its first plant in the US to produce biojet. We also produce hydrogenated vegetable oils in our refineries, increasing the share of renewables in our existing hydrocarbons. And as you would see, our targets by 2030 are quite ambitious. So from roughly 20 KBD, we need to go 50 KBD by 2025, and then basically double that amount by 2030. So the challenge is enormous, and building this scale would require all our resources and focus. We, of course, cannot do it on our own. We need innovation. We need fresh ideas from other industries. We need new technologies. And one of those levers for us to gain access to those new technologies is our BP venturing. BP Ventures have been investing in new game-changing technologies for the last 15 years and accelerating innovation across different energy sectors and energy spectrum. And those investments are really critical to us achieving net zero. So we invest in technologies that fit our strategy. So whenever we look at investments, we would always see how this fit the business, how this fit the strategy, what can it make in terms of, let's say, either growth or whether it's a game-changing new technology and how it can disrupt the industry. Our ventures team is one of the most active among energy groups, among energy venturing investments. And we invest from seed funding to Series D funding. And what is good about BP when it invests, we basically follow up in subsequent rounds. So this is very particular. We might take a bit longer time to look whether, let's say, the investment fits the strategy and so on. But once, let's say, we decide that we usually follow up in subsequent rounds. Another advantage is that we only invest if the business sees value. The advantage to startup in this is that we connect the startup with BP's global business, and that allows the startups to grow much faster and wider. So why, let's say, it is worth talking to BP if you have some great ideas, because of our, not just about the funding, the main thing is about the capabilities. So we provide multi-energy solutions. So if you have good ideas, it doesn't mean, let's say, we're looking just at one energy solution. We look at a number of different energy solutions, a number of different areas, and we're trying to find the best fit. We have a number of partnerships with companies that would also allow, let's say, to provide a network effect, not just in our industries, but in other industries as well. As already mentioned, we have global reach. So if solution might not fit, let's say, in one location, there might be other locations where the solutions could fit. We have significant project and operations expertise, so which could provide help to the startups in particular when they start scaling up, because as you would, appreciate, having been in the oil business, we have significant expertise in large projects, in distributed power projects, and all this expertise could be applied also to the new bioenergy businesses, because there are systems in place, there are operations in place, there are experts in place who would help to scale up, to get it to the right safety level, and to move the projects wider and get the best value of that. And we have a very large trading divisions, which would allow to move products across the world, to find the best optimization for the products and to find the best value of the products. Our traders have over 12,000 customers in 140 countries, which provides even further reach. So just to summarize, BP Ventures not just brings funding, but something more valuable. It's capabilities, network, global reach, opportunities, which would allow successful ideas, interesting ideas, game-changing ideas to scale up really quickly and be successful. So please do reach to us.
Thanks, Marta. That was fantastic. It gave a great sense of BP's approach to bioenergy and also your net zero ambitions as well. So that was really helpful. I know that it can be daunting for smaller businesses to understand the perspective of larger corporate investors. So yeah, really helpful to get a picture of that. So thank you. So we'll move on now to our next speaker, Cam Ross, Chief Operating Officer at Green Angel Syndicate. Cam and his team manage deal flow systems, due diligence and post-investment management. Prior to joining Green Angel, Cam co-founded, jointly ran and raised 2 rounds of angel funding for a contact payments business. He has a wealth of experience in creating, commercializing and patenting new technology. So Cam, I'll hand over to you now. Thank you.
Kim, thank you very much, and yeah, good morning, everyone. Lovely to be here, and particularly to hear such different presentations so far about from Scottish Enterprise and BP about different points that investors can get stuck into growing the bioeconomy. I'm going to share with you a different flavour of that this morning from Green Angel Syndicate, an angel syndicate that exclusively invests in companies that are fighting climate change. So we are one of the largest angel syndicates in the UK, and as I said, the only one that fights climate change exclusively. When we look for an investment in a company, there are 3 absolute requirements that we have. The first one is that we must be able to invest in companies that have a positive impact on carbon dioxide or CO2 equivalent in some way. Secondly, we want to find companies that have the potential for good returns for our investment. And thirdly, because we are a syndicate, a network of private investors, we really think that we can add value through our specialist members in getting involved in those companies. So we don't just invest to, we don't just write a check and walk away. We want to find companies that we can get involved with. And I'll touch on that a little later on as we go. Maybe just by way of background to give you a sense of scale of Green Angel Syndicate. So we have just over 300 members. All of those people are high net worth individuals who are looking specifically to make investments into companies that are fighting climate change. We have 28 companies in our portfolio today, and I'll give you a little flavor of some of those in a minute. My team and I see between 700 and 800 opportunities for funding for investment every year, and we end up making around 15 to 20 investments a year. So as you can imagine, there's lots of demand out there, lots of great companies with innovators and entrepreneurs who are out there looking to raise funds for their exciting dynamic companies that are fighting climate change. And we typically invest somewhere between 100,000 and £1 million per investment round. So very much smack bang in the sort of sweet spot for angel funding, which tends to come between friends and family money on one end of the spectrum and sort of venture capital injections of the multi-million pounds on the other side. And we very frequently co-invest. So it was great to hear Michelle talking about Scottish Enterprise. We've co-invested with Scottish Enterprise and many other organizations, particularly to do 2 things. One is to target particular regional investment that we want to make, and also to target, I guess, specialist investors who look at a particular slice of the green economy that we are particularly interested in as well. So hopefully that gives you a good picture of Green Angel Syndicate. We, alongside our membership of 300 members, we also run a fund called our Climate Change Fund. And the rules for that Climate Change Fund are really simple. So when Green Angel Syndicate members go through a due diligence process and filter down from those 700-800 companies down to the sort of 15 or so that we make every year, the Climate Change Fund will invest alongside those members. So the Climate Change Fund is a way for people to invest into this space, but without having necessarily to take the time to be part of the due diligence, be part of the investigation, be part of the filtering of those several hundred companies down to just the few that we make. So I said I'd sort of mention what we look at in the bioeconomy. I've got a few examples just to show you here. The first one is a company called Nature Metrics. And Nature Metrics is a fantastic business that uses DNA to create really a score or a ranking of biodiversity in a particular environment. What they do is they take water, or they take sediment samples, or they take soil from a rainforest, from a river, from a lake, and they run they take that material and they apply it through their filtering and sieving systems. And what they're able to do is to extract all the DNA of the plants, the animals, the fungus, the spores, whatever it is in that environment. And it's absolutely brilliant. Nature-based solutions are going to form a huge part of the way that we tackle climate change, and being able to measure biodiversity to make sure that it is not reduced and is in fact enhanced is a fantastic start to the tool set that we need to actually help our forests, our rivers grow in terms of biodiversity. So that's Nature Metrics. To give you a sort of sense of scale here, Green Angel Syndicate was a really early round investor in Nature Metrics. I think we've raised with them 3 times over the course of our 3-year history with them. In the last round, Nature Metrics raised just over £6 million as they've continued to expand their operations. Oceanium, this is the second time today you will have seen Oceanium's logo on your screen. The first one was from Michelle, so we co-invested with Scottish Enterprise into Oceanium. This is a brilliant company based in Oban, and what they do is they have a proprietary refinery system that takes sustainable farmed kelp and produces plant-based foods, cosmetics, cosmeceuticals, ingredients, which replace, in the main, petrochemicals. You can see some of the examples on the screen here. The top right picture, for example, is a biopackaging material which can replace petrochemical-based films, waterproof films, for things like coatings on waterproof food products, things like that. Obviously, there is a really high CO2 impact from a company like this because they are replacing petrochemicals and using nature-based solutions. I was really glad to look down the list of participants of today's call and see John Seal, the Chief Financial Officer for Oceanium, on the call today. So hi, John, lovely to see you. Scottish Bee Company. Now, today we're talking about biotech. This is a little less on the tech and a bit more on the bio side of things. So Scottish Bee Company, we made an investment into them, I'm going to say 2 years ago. It's a company started by Ian and Susie Miller. It's based in Livingston, just to the west of Edinburgh. And boy, it's such a fantastic business. Essentially, what Scottish Bee Company has done is set out a mission to increase the number of bees in Scotland by 20% in a relatively short timescale. We all realize the importance of bees for our pollination and for our whole food chain. And what they've got here is a terrific model. They sell honey, they sell wax candles, they sell drinks that have honey ingredients in them. And they are a very good explosive business in terms of growth. And they're plowing the profits that they make for that back into training new apiarists to go out and increase the Scottish bee population, care for the countryside, and improve the biodiversity and the wilderness in Scotland. Because as we know, habitats and nature-based solutions are absolutely terrific CO2 sinks to allow us to contain our carbon output. So terrific company. It's a B2C company. In general, we don't invest in B2C companies, but with my sort of advertising hat on here, I can say, go out and buy Scottish Bee products for your friends for Christmas. They'll really appreciate the sort of natural approach that Scottish Bee Company has. And the final example here of our investment into biotech is a company called Better Origin. Now, there's a photograph here on the left-hand side of Better Origin and their containerized solution. You can see there's a big sort of shipping container sitting beside that shed. And what Better Origin does is inside that container, they have a solution for taking food waste and turning it into animal food. So what comes along is a truck with some food waste, maybe from a supermarket, stuff that would typically have gone into landfill and produced really damaging methane gas as it decomposes over a few months or years. And instead, Better Origin's container takes that food and it pulps it up and it turns it into feed for black fly larvae. And those black fly larvae are cultured and grown in a semi-automated way inside a pallet solution that sits inside that container. What comes out the end is black fly larvae food, which are fed to chickens. In this case, that's what that shed has in it, a chicken farm. And it substantially improves the birds' health because they're eating fresh food, and really improves the farmers' margins because of they can sell their eggs for more money. So it's a win-win-win: CO2 saving, better animal health, better margins for the farmers. So that's a flavor of what we do in terms of the biotech space in which we operate. The final point I wanted to make was just to come back to the way I started and say that we have specialist members in our syndicate that look particularly to use their background and their skills to help our portfolio companies grow. So, for example, Bernie Balkan here is the ex-chief scientist from BP. We've got Caroline Halliday, who spent many years as an advisor for National Trust in Scotland, and Pierre, who has a finance background, particularly in green finance. And these are pretty typical of our 300 members. We attract people to that syndicate who want to invest and use their specialist skills to help our portfolio companies grow. And if that's something that interests you in terms of raising money and helping your business to grow, then my email address is on the screen. I'll be really happy to get an email from you and to hear your questions later in the panel session. So big thanks to everyone, and hope to catch up with you later. Cheers.
Thanks, Cam. That was a great sense of the scale and scope of Green Angel Syndicate strategy, and really some fascinating examples of the exciting biotech companies that you've worked with. So yeah, thanks very much. So our next speaker is Mark Leduc, Investment Manager at BASF Venture Capital. Mark took up his current role in 2017 after working in a range of positions within the organisation spanning back to 1999. He holds a PhD in polymer chemistry from Cornell University and an MBA from the University of Oxford. So Mark, I'll hand over to you.
Great, thank you very much. Let's see if this works. It's always the challenge. Let's give it a try. So what do you see?
Looks good to me. I think maybe
you see the slide and not the black screen, right?
We see your text to the right-hand side, so the slide.
You see that one? I have to change that. Hold on a second. Okay, hold on. I have to go here and change it. And how's that?
Yes, there we're good to go.
There we go. All right. Well, thank you very much. It'll be something along the lines of BP, I guess. Another corporate presentation, but anyways, we'll go through it. So good morning, everyone. Nice to be here. Name is, as I was just introduced, name's Mark. I'm an investment manager at BASF Venture Capital. I'd like to take the few minutes that I've been given to today to give you a brief introduction to BASF, its innovation landscape, and how our venture capital activities fit into that. So BASF is a global chemical company. We're active in 90 countries. We have over 240 production sites worldwide. And BASF employs more than 110,000 people that work to contribute to developing solutions to our customers in many, many sectors. Last year, BASF generated sales of just below 60 billion euros. BASF's activities are grouped in 11 operating divisions that are themselves organized in 6 segments. I'll just walk you through it to give you a taste of what we do and eventually what we look for as a corporate venture capitalist. So in our chemicals segment, we have petrochemicals and intermediates. They supply the other segments with basic chemicals and intermediates. So this is where the raw materials come in to the BASF value chain. The materials segment is composed of performance materials and monomers. Its portfolio comprises advanced materials and their precursors. So we're talking about stuff like polyurethanes, polyamides, but also biodegradable and compostable polymers. The industrial solutions segment consists of dispersions and resins and performance chemicals. This is a kind of a mixed bag segment, I would call it, where my colleagues in these divisions work on, for example, additives for fuel or lubricants, polymer dispersions, plastic additives, oil field chemicals, solutions for mining, and so on and so forth. So you get the picture. This one is a complicated segment to look at. The surface technology segment comprises the catalyst and coating division. Their portfolio serve mostly the automotive and chemical industries. The nutrition and care segment consists of the care chemicals and nutrition and health. So they serve the growing and increasingly sophisticated demands of the fast-moving consumer goods industry. So here we would be talking about additives for cosmetics, additives for the detergents and cleaners, vitamins, and so forth. Finally, the agricultural solutions segment is, which is also an operating division on its own, aims to further strengthen its market position as an integrated provider of seeds, crop protection, and digital solutions. So innovation is really key for the chemical industry, and BASF is taking this seriously, as indicated by its more than 2 billion euro R&D budget. At BASF, about 10,000 employees worldwide are involved in R&D. And last year we generated about 10 billion euros of revenues with products that have been launched within the last 5 years. So these are products that have directly resulted from our R&D activities. BASF operates 3 global R&D divisions. We have a process and research or chemical engineering division based in Germany. We have an advanced materials division based in Shanghai, and we have bioscience research based in the US. Together with our development units in their operating divisions, they form the core of our global know-how network. Now, since the people here are more interested in the bioeconomy, I thought I'd walk you through very quickly what our colleagues in the bioscience research division do. So the people in that division work basically on 5 focused areas. First of all, crop protection, wine biotech, seed and traits R&D, vegetable seeds, and toxicology. Now, if we look at the white biotech division, basically they're using the power of microorganisms for industrial production. So the colleagues here would be working with 2 platform technologies. First of all, fermentation technologies, and then biocatalysis. So they would use a combination of these technologies to produce new products and solutions in various sectors. For example, in chemicals or biochemicals, to produce enzymes or performance biologicals, or even biopolymers. One example would be the development of new phytates to help animals better utilize phosphorus and excrete less phosphate into the environment. So the colleagues here would have used a combination of computational approaches and high throughput screening methods to develop the new enzyme. Now, I just want to come back to this slide for a minute. As I said previously, the research and operating divisions are the core of our R&D activities. However, we can't do this alone. We've heard this from BP, and for us, it's exactly the same. We have to work with external partners to get new technologies, new impulses, and so forth. So the next shell on this kind of onion here is our open innovation activities. BASF maintains an extensive network of global academic relationships. We have many thousands of collaborations with various academia worldwide, and we operate several postdoc centers as part of our academic research alliances with top universities. We also work with industrial partners and customers, and last but not least, we also work with startups. Now, corporates there are many ways that a corporate can work with a startup. One of them is through corporate venture capital. So BASF started its venture capital activities back in 2001. I currently have 14 colleagues around the world. We operate and invest in Europe, North America, South America, and in Asia, with a particular focus on China and India. We also have a representative in Israel. We invest from a $250 million US dollar fund. It's an evergreen fund. And we take minority shares with tickets of around $1 to $5 million in startups in the Series A or B stage of their development. So a little bit later than the angel investors. BASF being a chemical company, it's not terribly surprising that we will focus our investment interests on startups in this sector. If you remember the slide that I presented a minute ago on which segments BASF is active in, you'll quickly realize that our interests are very, very broad. Now, to simplify this, I can split our investment interest into 2 buckets. First, what I would call the bread and butter bucket, which includes startups doing chemicals or materials, or even working on sustainability. So it's very close to the core of BASF's current activities. And on the other side are new innovative business models that could have an impact on our current business or on our future way of doing business. So it's a mixture of the bread and butter and the new business models. So we'll be looking, as a corporate investor, we'll be looking at financially attractive investment opportunities that also have a strong strategic fit to our existing or now future activities. Let me end by showing you a little overview of our portfolio. And I think this rendering describes pretty much what I described in the previous slide. On the left-hand side here, you would see startups that you would normally expect from a corporate VC investing in chemicals. On the right-hand side, however, you might find interesting investments that are maybe not that obvious, but we find that are strategically relevant and have a disruptive potential for how we would do our business in the future. So I think my time's up. So I hope you found this very quick introduction useful, and I hope we can use this as a basis for the Q&A in a few minutes. So thank you for your attention and look forward to talking to you.
Thanks, Mark. That was great. It was really useful to get an understanding of the BASF structure and the vast range of sectors and technologies you engage with, so many of which have relevance for the bioeconomy. And also great to hear your openness to working with external partners, a real range of external partners. So thank you. So we'll move now to our final speaker, Sarah Hardy, Director and Head of New Investments at Archangel Investors, a prominent business angel syndicate at the forefront of early stage investing in Scotland. Sarah has extensive international experience of financing and managing early stage opportunities in healthcare technology. So Sarah, over to you.
Is that working? Can you see my screen?
Yeah, I think you might need to go to presentation mode and then.
Does that come up?
Yes, yeah, that's it. Yeah, good to go.
Phew. It's always a panic when you're, I was getting that screen here. It's always a panic when you're at our end trying to get this right. So thank you very much. Well, to everyone who's gathered here today, thank you very much to the organisers for arranging a great lineup of and a fantastic attendance here, and thank you for inviting me to come along today. First of all, on this slide here, I put my contact details. I'm happy for anyone to follow up with me offline. And the first point I'd like to say here is, as you'll see from my fellow presenters, investors aren't scary, and we're very keen to engage with companies at any stage. And investors ask lots of questions because they want to understand your business and they want you to succeed. So what I'm going to do today in my talk, we've been given a couple of points to get across. I want to explain who Archangels are, give you a brief overview of our investment criteria and some of my observations about the landscape and what I see the opportunities will be. Right, so Archangels, for those of you who don't know, we are, like Green Angel Syndicate, we're a business angel syndicate based here in Edinburgh. We invest in early stage technology and life science companies which are based in Scotland. We are comprised of just over 100 members who all have a passion for growing companies here in Scotland. And that's one of our core business pillars, which we really underlies our strategy. We really want to give back and use our networks to give back that information and value to help the next generation of entrepreneurs. Now, other things which are important to our investors, obviously making money is important, but so is also having some fun. So what I'm going to do next is just very quickly go through some of the key investment criteria we have. Now, as I said in the slide here, we have quite a vigorous and consistent investment philosophy. We do invest early. We like to invest in IP-rich, deep technology, life science companies that address real large market opportunity with high growth potential and international sales potential. Now, I appreciate when I put in the word IP here, people start thinking, what do you mean by that? So it doesn't necessarily need to be a filing, but there must be something here, some barrier to entry that you can't be easily copied or replicated, or you have a first mover advantage to help investors. We want to provide investment to the most innovative and promising companies to really help you find the capital to fund your growth at that early stage. We typically invest through EIS to maximize the investors' opportunities here. And this slide says we invest sort of 50K to 2 million in the first round. I must admit that I haven't seen anything we've done for 50K. I don't think opportunities of that size come across our door very often. The typical first round investment has generally been about 1 million. But unlike other syndicates, and there's different types of angel syndicates, we like to lead our investment because we really like to roll up our sleeves and get involved. And we really like to use our domain expertise and diligence and expertise in our network. But when we first invest, we very much look at what is the cost of your overall opportunity. We don't just look about you want 500k now. We look about what we think it's going to cost you to get that sustainable business or your route to exit. So sometimes we find, and it's easier to say why we don't invest is based on what our criteria is. You might want £1 million investment today, but actually within 12 months, you need 80 million to build a factory, to buy a wind farm, or to do something more capex intensive. So understanding your investor that you're speaking to, what their appetite is and how far they go is a really important criteria to think about. So we typically coordinate and work with partners across the piece, including many of the investors mentioned today. We generally invest about 15 to 20 million across the portfolio each year. And on average, we're putting about 10 million pounds per company. But we do work with others, and including those in the calls. Unlike funds, though, we are a patient investor. We don't have a time horizon. So we find the average time for exit for most of our companies is about 8 to 9 years. And actually that's getting longer as we see more ambition from our companies and companies who want to go further. I just want to move to the next slide. So just here's some basic stats, which I've just mentioned already, just updating who we are. As I've already mentioned, we're not a fund. We've got just about 100 odd members here. And we've got currently a portfolio of about 20 companies, which is quite small. We have invested in over 88 companies to date. We've been going nearly 30 years. So we're probably one of the oldest angel syndicates. So why I mention that is we've learned our lessons. We've had lots of challenges and things we've learned over the years. And we've got a good track record of exits and returning investment to our members. One thing that's different to Cam when he spoke earlier is that we are sector agnostic. So when we're looking at our deals, we're looking at all deals in totality and comparing what we want to invest in. We see about 200 applications which make our criteria. 78 we probably look at more detail, but we actually only do 2 or 3 new deals a year. So it's important for people on this call to think about how can you help the investor, show them that your opportunity is exciting and is one that they should take forward. We do in our current portfolio have quite a few companies who I'd say are on the edge of the bioeconomy, and hopefully that will be changing shortly. We're speaking to some exciting companies at the moment. But the companies we see at the moment at the edge are, for example, we've got companies which are replacing precious metals in basic sensor technology for remote monitoring. We've got companies which are looking at new batteries. We've got companies which do cell analysis and new novel tools, which will help companies with manufacturing and QC as they grow and scale. And the last slide today is just really to stimulate, because I realize I'm the last speaker before the Q&A, is why it's to sort of stimulate the forces I see where we are today and some of the observations that we see when we have opportunities coming to us. So if I take the left-hand side first, you've got to assume when you go to your investor that they're not a government or a charitable organization or a funder. They're looking at your business because they've got to believe in your business model and they ultimately want to make a return on investment. So really, if you're looking at a generalist investor, really you've got to help them. You've got to provide them comfort around the areas where they'll be nervous about. You know more than they do, and they'll be nervous about their either problems they've had to date or track record, because they want to make sure they don't make the same mistakes as before. So I think a lot of it sometimes is helping them understand the timelines. How will you scale your business? How long will it take? How can you mitigate that risk? And sometimes the jump between a sort of small scale up to a large scale up is harder than people think. What's the end customer? How price sensitive is your end customer? What are the perceived risks around your end product, if there is a product per se or a solution? Then there's also other sort of challenges that this sector has witnessed to date, which has been around the view, and some of the questions we see in the chat box are around perceived risks about policy or regulatory. Now, I appreciate we don't have a harmonized approach across all sectors and all countries on the environmental regulatory frameworks, but there is some challenges regarding, for example, access to materials, whether that be historic seaweed and aquaculture. But I think it's taking where I've got that and building that into your business plan to help give comfort to the investors. I think for us is making sure you choose your investor who has the right appetite for the quantum of funding you're looking at. Angel companies can't look at high capex. But however, we are seeing new innovative opportunities now with repurposing of facilities, repurposing of different old laboratories and sites, which will be an opportunity to new companies. I'm very excited when I see INEOS going into Grangemouth. I see that's a real positive thing. So as sectors change, we see that as an opportunity for new businesses to take over labs. Now, we maybe class it as negative, but if I take the other side of the chart here on the opportunities, as an angel syndicate, we are seeing, and we all agree here, we're seeing unprecedented unmet need. And the difference I think we're seeing just now is that there is now a pull from the other side of the coin. We're seeing market forces are very much pulling us forward for there. It's not just it's nice to have, this is now essential. We think we've got a thriving and growing sector, which is expected to continue to grow. We've got a large addressable market, and there's loads of innovative projects that are under development, which we think will emerge as new businesses. And many of these are not probably even developed, as we say just now. And I think from an investor point of view, the biggest change we're seeing is that the willingness of customers and corporates and clients to demand these technologies and solutions that don't exist to date. We've already heard from Marta at BT about its vision, but there's lots of corporates out there. If I take Unilever, for example, and their net zero emissions to take products all the way from source to point of scale, we are also seeing they're putting £1 billion investment. So for all these companies to achieve their ambitious goals, it's the people in this room or in this call today that have to come up with novel solutions and products. And that's where we think the market is right to go forward. There's been a huge investment over the last decade in capitalization, R&D, facilities, and now we believe it's an opportunity for us to look at those exciting opportunities to see how we can take them forward. So we're excited about the future, happy to look at opportunities, happy to engage with the community, and we wish everybody luck. And that's if you have any business plans you'd like to send to us, please send them to the inbox or to myself directly.
Thank you, Sarah. That was great, and a real sense of your strategy and your investment criteria, and your Scottish perspective, and also your focus on fund and the opportunities that are before us. So thank you. So I'm just going to share my screen again now. We're going to move now to our panel discussion. Just a quick reminder, Dan outlined the housekeeping points earlier, but we're really happy and would invite you to unmute yourself and ask questions. But just because of the numbers that we have today, if we could ask you to raise your hands and we'll come to you in turn. If you prefer, if you'd rather not speak on the mic, please do pop your questions in the Q&A box. I know there are a few in there already, and we'll do our best to come to those as we move on. So I think the first of our questions comes from Ruben Carr from Ingenza. Ruben, do you want to unmute yourself and ask your question?
Yeah, hi, thanks. Martha's actually private messaged me already with some responses to my question, but for the benefit of the others, I'll raise the question again, which is really around BP's view of the future distribution and makeup of the energy they're proposing in hydrogen between green and blue. Given they're a fossil asset resource company, you might consider they would bias blue, but just interested what support and interest they have in pursuing green hydrogen as a energy make for the future. So perhaps I'll invite Martha to respond on that for me.
No, absolutely. Basically, let's say we look at on this on a case-by-case basis, and let's say there is no view in terms of what share it would be. As you would appreciate, blue hydrogen doesn't fit every location. Just there is simply no possibility to do the carbon capture and storage. And I wouldn't also say that, let's say, we are biased towards the natural gas simply because we have the natural gas. We have the strategy to grow our renewables portfolio. So this is one of the areas of growth for our green hydrogen. Most importantly, the decision would be always made based on how this fit our strategy in particular location, and also what is the substitution effect. So what basically this hydrogen substitutes.
Thanks, Martha, that's great.
Thank you, thanks, Martha. I think I have a question from Sarah Holland from Potter Clarkson. Sarah, are you
Hi, yes, I'm here. I think this question's probably been answered in part because I think some of you do invest in this and some don't. So I was just wondering, a lot of the new bio-based technology is quite new, doesn't necessarily have a market yet, because at the minute a lot of oil-based things are still a lot cheaper, so there's not the, I don't know, I guess if you're looking at a business plan for some of these technologies, there's no actual market. So as investors, are you happy to take that longer view, knowing or hoping that at some point, because we need these technologies, they will be commercially viable compared to the current technologies? That on top of the risk, you've got the science not actually working, or the scale up problems, you've got the fact that once it does work, nobody might not buy it.
So it's Michelle Kinnaird here, I can kick us off there if that's helpful. I mean, I think there has to be, and we spend quite a lot of time looking at roadmaps, for want of another, so the aspirations you've seen today, BP, 2050, Scottish Government has got aspirations for 2040, 2045. So therefore, we spend a bit of time doing that horizon scanning, for want of a less cliche word, and to see what gaps are on that path. So for us, we are longer term, quite patient and visual investors, and quite often we are investing when others will not take that longer term view, and investing for where we need to be, because that actually then helps bring others with us. So quite often we'll invest a wee bit earlier than some others, and kind of help prove the technology and move it on. I think it's all about the size of the prize at the end as well, that it's worth that longer term investment if it's going to make that massive change that is needed and is absolutely key in the overall direction of travel towards net zero. So I think it's a very individual assessment when we see different opportunities coming in. Hope that helps. So,
yeah, thank you.
Thanks, Michelle. Is anybody else that would like to add?
I guess I could add something to that, because it's we're not a really early stage investor. We invest where you already have a proof of concept, but there are enough investors that are at the early stage who will be willing to invest in technologies that doesn't have a market, because it's the nature of the game here, that if you have a really disruptive thing, sometimes there's just no market and you create a market. And I think sophisticated investors understand that. The corporate investors, I think from the VC, you'll have two things. You'll have the standard VCs who have a fund life. So the patients will, that's why they invest in digital stuff, because it's a fast path to market. You don't need that many capex, and for a lot of the bioeconomy and chemical stuff, you need much more time to develop and bring stuff to market. And so the corporates, we have an evergreen fund. We're patient. We don't have a fund life. We of course want to do financial investments that make financial sense, but we are of course we're very well aware of the challenges that the startups in this sector will have to do this. So I think that the corporates will be more patient than normal VCs, but I think you will find investors who will be willing to take the dive and invest in a company that is developing a new market. Hope that helps.
Thank you.
Thanks, Mark.
I've got some questions I can read out. I got one from Emils. I don't know, Emils, if you want to speak out or not, but Emils was asking Marta if BP is also investing into agri-food.
Just to be exact, we don't invest in agri-food because we are not an agri-food company, but we are looking at natural climate solutions. It is an early stage that we are looking at because there is a lot of work that has been done in natural climate solution, in particular in terms of soil carbon, basically soil carbon sequestration, but it's like, it's all location specific. Again, you would see different impacts of different crops on soil, depending on the geography, depending on the climate and so on. So I don't believe we have any investments directly in the natural climate solutions, but we are looking into this area.
Thank you for that.
Good. We got a few questions for Kem. First one from Jamie. Kem, when is your next round of funding opening up for applications?
Thank you, Jamie. Yeah, we've been in contact on chat as well. Okay. So just to make it clear to anyone, we don't fund in batches. We're always open for people to put in applications for funding, which they can do from our website. You don't need to wait for any particular time of year or anything like that.
Thanks. I don't know if you answered the next one as well in the chat, but Ed was asking if you are charging companies, SMEs, to talk to investors.
That's a good question. Yes, we absolutely do charge companies. So we're a high value add service to help our companies grow. And like any investment structure, we absolutely have a funding fee for that. We tend to align those fees with the ultimate growth of our businesses. So in other words, things like options or equity in our companies as we help them grow over time, which incentivizes our members to help that company grow and incentivizes the company to do the same thing, which is what they want to do anyway. Thanks.
I think a general question from me, because there are lots of startups on the call, and I assume all of you getting lots of application, everyone asking for funding. So what does it take for an SME to really stand out, to capture your interest, that you want to talk to them? So basically, how are they getting the foot into your door? Anyone who wants to start? Well, maybe I've got the mic open, so maybe I'll start, Dana, if it's okay. So yeah, I sort of outlined what we're looking for, and the three things are a really big carbon impact or CO2 equivalent impact, potential for upside for our investors, and thirdly, companies in which our members can actually get involved to help grow. So the ones that come through the front door, so to speak, and that look the most attractive to us are the ones that max out on those three different categories. It was really interesting hearing Sarah talk earlier about not just looking at the sort of initial funding requirements for a business, but rather the sort of long-term total capital requirements for expansion in a business as well. And that is really important. People in early stage of a business might want, £200,000, £300,000, £400,000 now, but we know that they're going to look for capital down the road. So for an angel syndicate like us that typically does not fund into those higher multi-million-pound brackets, another thing we would look for in considering those companies was, do we know people, do we know companies that we can work with to help that company over its funding lifespan to continue its growth once they've sort of moved beyond us and graduated, if you like.
Yeah, I totally agree. I think we're both aligned on that one. I think it's also helping work with the right investors and co-investors and working out a route to getting to that vision, because you don't have the fund width to take it the whole way to market.
I suppose if I could add into that, our typical investment tends to be up to, 2 million. It can be 2 million per annum. What we find is that we would always aspire to try and have quite a varied investor set around the table and really encourage companies, I was going to say to go down to London, but nobody goes anywhere at the moment, but to get their pitches and their teasers in order to actually go and target the right investors for them and work alongside them. What we are able to do, because again, we're not a fund, we're always open, and any exits, I know somebody was asking about that in the comments, so do we like exits? Yes, we do, because it means we get the money back and we can get it into the earlier stage companies. But that means that if it is right for us to continue to follow our investment, then we will do that. And we do have companies at very different stages. We had a company a couple of years ago that just before they were ready to float, they were saying, look, we're short of money here, and there's a real push for some of the original investors to be following their money. So again, we can't do that for everybody, and it's not appropriate for us to do that for everybody, but it means that if we need to and if it's appropriate, then we can follow our money maybe a wee bit more than some of the others that focus on the early stage.
But I think there's an opportunity just now for early stage companies to get some validation, to get things out and going, get your patent strategy, if there is going to be one, but get it to the next level. So we are seeing new investors coming into the sector that are coming up. We're seeing a lot more investors even coming to Scotland, dare I say it. But actually, maybe with COVID, actually people are re-looking at their geographical areas. Zoom helps people engage earlier. So we are seeing new investors coming. So to get our opportunities and our businesses in the best possible shape for those downstream larger fundraisings, that's just an opportunity.
On the topic of patent, we had another question from Sarah asking if you expect all the early stage companies to have already IP secured, or is that something you can do along the process as you invest? You're on mute, Sarah.
Is that for me? Sorry. For me, I think we're looking at defensible, coming to a defensible or barrier to entry. I think it depends. It's case by case. Ideally, the best case is you have a strong patent. That's fantastic because it helps you. If you don't have a strong patent, you have some know-how, but that will then depend on your business model. If your business model is then to go and outsource that and scale up all around the country, or like the Coca-Cola secret sauce, well, how are you going to protect that? So I think it's always case by case. It'll depend on how you can protect and have a barrier to entry to stop other Me Too's coming along, and how you protect your position.
Mark,
and that's from my point of view, but I'm sure others have different opinions.
Yeah, I was about to say, Mark, you're nodding along.
Yeah, I'm nodding along because that would be exactly my answer. I completely agree with Sarah. You don't need a patent. It all depends on your business model. The best thing is a great patent, but it's not always obvious. And if it's strong know-how, and if and if you only have you're writing a patent application, if you can show to the investor that you know how you want to protect your idea. That's the most important thing. Yeah. How do you protect someone from just copying it? Yeah, if somebody can copy you, then your valuation is basically zero. Yeah. So it's very important to show how you will plan to protect your idea. Yeah.
Marta, Kim, Michelle, any other views on that? Or
I suppose echoing everything that's already been said. I think everybody has that worry, oh, we don't have a patent or whatever, but it's about getting that strategy together. So quite often when we are investing at that earlier stage, part of the money for that investment is to look at that planning and look at the strategy. And that doesn't mean that you will be filing patents and IPs and things like that. It's about knowing, it's about if you are not going to file, you know why you're not going to file. And there's a strategy sitting behind it. I think the second thing I would say, my understanding is there's quite a lot of very early stage and people with technology that are attending today. And I suppose one of the things that very early on that we spend a lot of time over the years kind of getting to know is the different ways that different organisations, whether it's some of their London-based colleges or some of the Scottish, is getting if there is IP and patents and getting that kind of sorted out early on, open book, and start early with negotiations with either your corporate or your university or college that the IP is coming from, in order to make sure that you're able to talk to that really clearly for your investors.
Thank you. We got another question from Ed. I don't know, Ed, if you want to unmute yourself or so, but he said he's looking for investment. Hey, Ed, do you want to?
Sure, happy to. Hi, guys. That was very interesting. That was very illuminating in many ways. So thank you all for your presentations. It wasn't repetitive. It was excellent. So good stuff. We're in a really exciting stage of development at Carbogenics at the University of Edinburgh, and in the next couple of months, we'll be looking to raise some money, and half of it is going to be capital based for a plant here in Scotland and the relative equipment, and half of it will be revenue based. And I know there's been some comments through the sessions today about the challenges of raising capital and revenue and who focuses. So it's a more general question to say which of you feel comfortable in providing finances for both, and which would prefer a balance, so forth. So I don't care who starts, but I just thought I'd ask the question. Thanks.
I'll go because no one else is coming off mute. I think it depends on what the size of your round is and what the capital is. I think it's very case by case. From Archangels, we're an early seed investor. We can only, if we're putting up to 10 million per company, the capex you're expecting from us wouldn't be that high, but we do a lot of equipment and small scale things. So I think for us, it would just depend on what the size of that round is. But if it's large scale capex for us, it's probably very difficult, and we're not the right funder because we can't give you what the company needs to succeed.
I guess that's similar for us. I mean, we're not a seed investor. I think our sweet spot is Series A. Yeah, just it doesn't need to be revenue generating. It can be before you're ready to generate revenue, but the scale up. So if you go above 5 million in tickets, then that's going to be a bit difficult for us. So that's kind of the valley of death for all the chemical companies and the big biotechs. They need to find that funding for the scale up, and this need has been recognized by some funds which are popping up. Maybe I don't want to do any publicity, but there's one fund that comes to mind, which is called the European Circular Bioeconomy Fund. It's a mouthful, but they're addressing exactly that point. The need for startups in the bioeconomy to get growth funding to really scale up their plans. Yeah. So that's maybe one avenue to look at.
Anyone else has any more?
Let me just say, I'm going to mirror Sarah's response. You know, it kind of depends a bit on what the business model is and the term, I guess, or the maturity of the business at that point. But Ed, you know, thanks very much for your chat that we've been having as well. I'm happy to follow that up offline with you.
Thank you.
Do you have any questions from anyone else? Either in the chat box, or if you'd like to come off mute and ask your question directly.
I'll ask another one since there's a bit of silence there. No problems with filling a space. Not about the business, more general. Sarah, you were saying about the market, the need. I've had my ear to the wall for a while, and I've been looking to see whether investors are really ready through the Brexit and through COVID, just all the spent up capital ready just to invest, or whether actually it's a more challenging situation out there and perhaps people are being a little bit more hesitant. What's your view generally about the current investment situation here in Scotland, ideally, but the UK overall, for small companies looking for 1 to 5 million to get that investment from angels, from venture capitals and corporates? Sarah, let's start with yourself.
Yeah, no, absolutely. And I think if you'd asked me last March about, I would have a different answer. I think we've moved on. I think people are looking for new opportunities, actively looking for new opportunities in that space. I think the appetite is there, if not greater. There's people maybe took the foot off the gas a bit last year. They were focusing on the current portfolios, and they were raising for those current portfolios or keeping it a bit in reserve. People were nervous. But actually, we've been doing growth capital for our current portfolio. We've made 2 new investments in the last recent whiles, and actually we had a board meeting recently, and I realized I physically hadn't met all the team in one place. We had a face-to-face board meeting recently, and we said we actually hadn't all met, but we spent so much time on Zoom, I didn't remember that we hadn't physically met. So I think work's continuing. There's lots of new big funds out there. There's a lot of capital out there. I can't talk for different sectors, but I think there's, in terms of the gap for me, I don't think it's 1 to 5. I think the gap that we're seeing is very much that 5 to 10. So you're too small for the very large raise. You've got your technology, but you're still that little bit of proof points coming. So to me, the gap's not the first bit of money, it's that middle bit of money where you're too small for the big funds and you've just got some proof points to come. But that's just my personal observation, and obviously sector specific.
Ed, I could probably come in there. So everything that Sarah said, I suppose So part of you've seen from our slides is to look at the market, see how that's reacting. That's both Scotland, UK, and then overseas. We this year in particular have had a lot of international investors sitting alongside us in our portfolio investments that we've done. So I would also echo what Sarah said, is it's great I can sit here in my spare room, and actually it doesn't really matter where the investors sit. We're no longer kind of outside the London Triangle. What I would say is we did see last year that the very early stage, so last year spin outs, startups were really struggling quite a bit, and that's why our COVID response was early stage, part grant, part convertible loan note, because what we didn't want is in 2-3 years time, if you've not got that pipeline coming through, you then don't have that innovation coming through. So I think that's an area of the market that we are keeping a really close eye on. We've put additional money into that, within SC this year in order to make sure that continues, because we don't want that drying up. I think what we're also seeing is there was a lot of people hunkering down and keeping the money to look after their portfolio. That is now beginning to shift, as Sarah has been saying. We are also seeing quite a lot of businesses that probably should have been sold, last year or a wee bit earlier on. So the M&A market, especially for some of the really quirky technology, is opening up again. We've had quite a successful year exits wise. And my last observation, to echo what Sarah said, is I think it is that kind of 5 to 10 million. It always has been the area where we've struggled. In Scotland, it's making that leap forward. So it's great to see BP and others, on a call like this, because that's really it's that sort of step that some of our ourselves and some local investors then start to struggle. So it's making that switch. Whereas if you look at what, for example, like Enough Food have done, I think once you start to build a syndicate, especially of US-based investors, then they will bring others into the syndicate as well. So I do think it's like you get one and the rest will come. So but that's really where we spend a lot of time, just making sure that businesses are as ready as they can be. And also what we do is we take them to some investors that we have that we'll say, look, this is maybe a wee bit early for you, but we'd like you to have a look at that. So they're keeping an eye on it, but also that we get the feedback, and we feedback to the company and say, right, okay, it's not for you at the moment, but what does it need to look like in order for you to be interested? What is the value inflection? And I think that's for the 5 to 10 million where we in Scotland, really try to add that value.
Yeah, I just echo, I think speak to as many people as you can just now, because they will have people, it might not be for us, but somebody else in your network, you can reference them, and that you get that through looking for new board people, looking for new recruitment for your team, but it's just that networking. People want to help.
Thanks, guys.
On you go, Dana.
I know Greg, you posted one more question, but we come back to that. First, Sheena, and then I come to you, Stephen. Sheena, if you want to unmute yourself.
Thank you. It's another IP question. I wondered whether there are processes in place to ensure that the IP strategy evolves as the company scales, and that issues around third-party rights are considered at appropriate stages, or is it left to the portfolio company to develop their IP strategy themselves after the initial IP due diligence has been completed? Particularly, I'm thinking about where you're investing for quite a long time. Like Sarah mentioned, a sort of 8 to 10 year time frame. So that's quite a long time for a company's plans to develop, and the IP strategy needs to support those plans.
I'll just quickly make a comment. I think it's absolutely imperative that the board's always keeping an eye on its IP strategy. It's integral to a company's success. For some of our companies where we really are concerned about it, we make it a condition subsequent to have a separate intellectual property management group, because you've got a real concern about how you build that up and you make it very explicit. But I think monitoring and surveying the landscape for IP is just bread and butter, because I think you just need to do that. I think it's on most board agendas. I don't want any to recommend companies go down a litigation route, because it's not easy, and you want to avoid that at all costs.
Thank you.
I think I'd say, Sheena, that we've heard it several times on this call. Finding the right partner to help your company expand is going to help you in the areas where, I mean, don't mean you personally. One is going to be finding the right partner is going to help a company to expand all areas of their business, of which IP is one of them. And finance is one of them, product is one of them, marketplace is one of them, team is one of them. I wouldn't necessarily focus too much on IP, in the detriment to some of those other areas. But finding the right partner will be really helpful. So if it's a case that people on this call are concerned about some of their IP strategy for the future, then your partners will want to help, because that's why they invested in you. Is they see the confidence there of expansion, and they want to see their return as defensible as possible, as Sarah was saying. That was a good phrase she used earlier.
Anyone else want to chip in, or if not, I can hand over to you, Stephen. You have your hand raised.
Oh, excuse me. Hello. I've worked with clients who've got proven technology, but they want to set up sites on which to run businesses to make money from that technology. One big problem is, first of all, finding the sites. But even when we do, the biggest hurdle is actually getting the money to get planning permission on which to run that business on that site. We can get funding for doing the business after we've got planning permission, but we find we really struggle to get money to fund the planning permission. And that could be 100,000 up to £1 million. So are there any funding streams that you know of where we can get funding to get the planning permission?
Can kick off on this, but I don't have a magic wand, Stephen. I think I suppose the way that we've seen it work is there's the underlying technology that sits in a company, and a company is funded for that technology, including its first plant, for want of another word. So the planning permission would be part of the overall kind of equity round going into that kind of top co, so to speak. I think that bringing in new investors specifically for planning permission on the first site or the first plan can be very difficult. That's why we quite often see special purpose vehicles being set up when they get past the planning permission, but the planning permission will be paid for through just the general equity going into the company that's got the underlying technology. So it goes in just as part of that, as an investment, I suppose, into proving the technology. And then when you've got your planning, you can look at the plant and the build and the construction and the capex that goes around that, and that's when you could get a combination of more traditional investors in there. But unfortunately, especially first time round, it tends to be the company that holds the underlying technology that quite often has to foot the bills for the planning.
I'm not sure I can give a very competent answer from the UK perspective, more the European, so French, for example, or Germany. I think every country will be slightly different. I know that in France, there's the regional banks, and there's some regional funds that support the startups. So the French government is very supportive of the startups. So the BPI, for example, has all sorts of initiatives to support the startups, and also to build plants, to buy an old plant and refurbish it to your needs. For example, I had one example in that direction, and this was financed through local banks, local BPI, all sorts of. I mean, there's all sorts of money, at least in France, for example. I don't know what the UK looks like, but and Germany will be also a little bit different. But I think for those kind of smaller, I mean, for us, smaller, 100,000, 200,000, you can probably get the financing locally. But again, that's a French-German perspective and not a UK perspective.
And Stephen, sorry, just to add a few things there, I suppose, you know, what's happening at BP and, you know, Scottish Enterprise and our other agencies working with local councils and such will look at specific areas and will make that kind of step change innovation in order to take infrastructure, maybe some of the wider things away from an individual company having to have that expense. So I suppose what we're doing in the Michelin site, for example, is a really good example of that, where there is a technology park where hopefully lots of different businesses will be able to kind of utilise. I suppose the other thing that I would say is, while there might not be money for it, there you are, go and get your planning. But I think if you have a technology and you are struggling to find, well, you said you could find the places that within the planning, I think it's about looking at where it is and coming and speaking to the right people for that particular place. So for example, I'm heading into Glasgow this afternoon to meet a US company that's going to be relocating here in Scotland, and that is, you know, that has been a bid that's been the local council, ourselves, and quite a few others all kind of sitting around that in order to make sure that we're delivering what is needed. So I think if there's a will, there's a way. Let's look at what particular areas might already have that infrastructure or that help there. And then if it's very specific that you need and you have particular plans, then it's then saying, well, who else has got that vested interest in making that work in that particular area? So hopefully that helps a bit.
Sarah, Marta, I saw you nodding along. Maybe Sarah first and then Marta.
Yeah, no, I think I disagree. It's just using all your contacts and networks. I mean, Michelle's obviously talked about Scottish Enterprise, but the affiliated other parts of Scottish Government, we're seeing SNIBs in the Scottish National Investment Bank doing quite a lot of these big infrastructure plays, and I'm not the best person to talk about that, but if you look at some of the investments they've done in this space just now, I think they're looking at, when I look at Indie Nature, that's a lot of planning, site, infrastructure, and helping the community. So there's that partnership as well. So it's just exploring and having as many conversations as you can with relevant parties.
Thanks. Marta?
Yeah, I would like to support what other people said, and I would say just basically, in a way, there are two things, right? So one thing is like the willingness of the local community to have this enterprise in their community, and basically getting the job creation, getting the new enterprise, and so on. The other thing is pure funding, and in terms of pure funding, let's say, at least from our perspective, we would look what the whole business plan is, right? Because just doing the piecemeal financing is probably not the most efficient way to do it. You want to see what the whole strategy is, what the whole business plan is, and you want to raise enough money for each round to basically to take you through to the next stage of your development, because raising funding is A, expensive, and B, is very time consuming. We want the entrepreneurs to go and do things instead of, you know, like spend most of the time just raising funding.
Thank you, guys. We have a bit more time for a few more questions. The first one is from David. David asked quite a lot of technical questions, so maybe something we can catch up offline. But one he's directly addressing to Sarah, Marta, and Mark is around your preferred TRL level. So if you have any preferred TRL level at all.
From our point of view, no. We've gone later and earlier, and I'm very rubbish when you come to telling me exactly what TRL something is. Some things we've invested at has been at concept stage, and actually we've put funding in to build a concept, and actually when they've scaled it up to more life size, actually we've realized it doesn't work. And actually what we've done then is we've walked away, because actually if you reprofile that into a different company, that board didn't have the right skill set. So there is a bit of fail fast sometimes. So actually we will do things at different stages and across the portfolio. I think it's case by case for us.
Mark?
It's the same thing for us. I don't think that the TRL is the defining factor in the investment decision. It'll be the quality of the team, the quality of the idea, and the market behind it. We don't invest in seeds so really early, but I mean, you could translate our investment focus in a TRL, but I won't get hung up on a TRL level. I'll be more interested in the discussion.
Thumbs up from Kim. I think Marta nodding as well along.
Yeah, it's pretty much, let's say, it depends on the technology, depends on the market, right? If it's kind of a game-changing technology, you know, like we could go for a lower TRL. Just one thing, we don't invest in R&D. So if the technology needs to do the R&D, probably it's a bit too early for us. We would invest in the consortium maybe, but not in R&D. So again, depends what market, what sector, whether it's digital, whether it's, let's say, it's bio and so on, and what is the technology.
Maybe just to add something onto this that's relevant. The corporate VCs, they might not invest in R&D or early stage, but that doesn't mean we won't listen. And that's a fine difference. Yeah, we might not invest, but we will listen, because eventually you will grow. So the earlier we are aware of those ideas and companies, we keep them in the back of our mind, and eventually when they come back, we're ready. We're kind of primed for when the startup is ready. Another thing that we do is that a lot of the time we have a deal flow of about 1,000 startups a year, and of course we invest in 86, so that's about the hit rate. But a lot of the startups that we do meet, even if we don't invest, we do make introductions to the business units. So sometimes what's really important for a startup is not just the money, but it's talking about their technology, or maybe having a joint development agreement with someone. Yeah, so that's something that we also do, and that's a lot of my day is taking care of these interactions between startups and the people I know in the business units. Yeah, so that's kind of the added service that we do for the corporate and also for the startup. We try to bring them together, even if we don't invest. So that's important to know.
Thanks, guys. Any Kim?
Oh, I was just going to say exactly the same thing as you. If you said any more questions from anyone?
If not,
no. Okay. Well, thanks to everyone. Thanks to our speakers and to all the people that have joined us today and asked questions. I'm just going to share my screen one final time and just give you some information about some next steps. So we are running in many ways what's our complimentary session in the BCB on the 2nd of December this year. And it's a closed session for 5 selected SMEs to pitch their proposal to today's group of investors. And these selected SMEs will receive investor readiness training, which is provided by Scottish Enterprise, and that will take place in November. There's as I say, a selection process, which you can find details on at the link on this page. It's on the BCB events page, and that gives you details of the expression of interest process, closing date of the 22nd of October, and then there'll be a short list of 5 who will go on to receive the Scottish Enterprise training in November. So any questions about that, or anything that you've heard today, or if you'd like to be connected with anyone, find out more about the Bioeconomy Cluster Builder, please do get in touch with me. And so, yes, one final thanks to all of our speakers, to everyone who's been involved behind the scenes and making this event a success, and to all of you who've taken time out of your day to join us. Enjoy the rest of your day. Thank you.